Hey everyone, it's 2:30 on Tuesday afternoon. Wanted to give you a quick look at the charts so you can see exactly what's happening. We thought last week that we may slide sideways, maybe a little bit higher into the report here this Friday for corn and beans. Obviously, wheat is what I have in front of you here is July wheat, but it's going to be reactive to corn and beans. And it'll get drug around depending on what the corn acreage does. But right now, I think what wheat is doing is solidifying its acreage base and making sure that nobody works it up and that we produce as much as we can. I don't have to tell any of you that it is dry, nasty, and windy in western Kansas. We know this. We don't see that getting better in the near future, and so maybe wheat is putting a little bit of premium back onto itself. What is interesting here is a couple of things from a cloud perspective. Okay, first of all, this big move here that happened on what is this, March 22nd? So this would be last Wednesday, where we sold off really, really hard and then reclaimed the $8 level. We've pretty much been straight up since that time. And we've done so in a pretty impulsive fashion, and we've done so and blown almost all the way through our daily cloud. So remember, anytime we're above our daily cloud, we're bullish, and anytime we're below it, we're bearish. And even more so, every time we're above our Astra hedge line, which is this line right here, we're bullish. So wheat is turning into a bull story here, and the only thing bearish left on this chart really is this resistance here at the 884 level, which is where this move rolled over and broke from, maybe the 895 level. So we're still 30 to 40 cents away from what I would call a, oh gee, we need to rethink this moment. But for sure, what is happening here is changing our technical bias, because you can't really ignore the strength of this move, especially if we pop up. Now, what I want to see it do is I want to see it come up out of this cloud. I want to see it come back down and test it and then go. One thing about cloud theory is that there is a tendency for a market, when you have a setup like this is called a belly down Kumo. So you break out the top, you move, and this front leading edge crosses, and then there's a tendency for this market to fall back down towards the belly here and test. And so what I'd like to see it do is come up and back down and kind of follow this chart pattern right here with this slope down into this area where we can get it rebought. There's no reason that it has to do that. That's definitely not a guarantee. But there is a tendency in that in Ichimoku theory that would happen. Now, regardless, I think we'll probably step in and try to buy it on a test of this cloud, or even a break higher. We'll probably step in and re-own some stuff there. But otherwise, we're just going to hold our short position into the report and see what happens with corn and beans. And we're not going to get too worked up until we trade above where we were 26 days ago. We're trading above the cloud, and there's some sort of bullish impetus behind it. Okay, now let's look at corn. Here is May corn. It was strong yesterday, or the last 3 days, but today it ended with a little bit of a doji. I don't think too much about this, to be honest, because of the report coming up on Friday. We do have this head and shoulders formation. Here's a left shoulder, here's a right shoulder, here's the neck. There's a neckline right here. If you connect this peak to this peak right here, that would be the neckline. We're trading above it, and it does count all the way up here to 680. Based, and the way you count that is from this low to where the center of the neckline is. You would double that position, and that takes us all the way to 680 on May corn. I don't know that we'll get that done or not with the report we have coming up, but nevertheless, if it does go higher and attracts some technical buying, it's clear why. It's also pretty clear that this could be a bear trap right here, and we could move people into the dust. So what we did here is we liquidated May puts that we owned just in case we move higher, and we're looking to move out into July or to December. We'll probably make that decision Thursday, depending on what happens. And depending on what December does, we may just use a future stop instead of an option because of what will happen with the premium. You know, it's a high risk event, so generally the option writers will command more premium because of the risk that they're taking when they sell an option. So you can see options inflate themselves and get more expensive in the new crop contracts. Going into a big report like this. So sometimes using a future stop into a rally is the best is the best tactic. Now here is what December corn looks like. We've rallied. We have not retaken our hedge line. Let me put the cloud on here so you can see where we are in relation to it. We have not put the retaken the cloud. We're not near as strong in this market as we are some of the others. But on the other hand, we are up 30 cents or so from Friday's low. So definitely better than it was. And the other thing I really like about this is that we've reclaimed this downward base channel. I'll adjust this so you can see where it started. This is the high set back here at 637 connected to this intermediate peak with a lower band snapped to the intermediate low in between. And when we broke out of that, this should have accelerated lower into a deeper and bigger move, and it didn't do that. It bounced, and now we're trading back to the mid-level of it. So that is something to keep our eye on. And I think what corn is really doing is saying, okay, let's make sure we have the acreage. Let's make sure we pollinate this crop. So let's keep some weather premium in this market before we collapse it. If our carryout's going to head to 3 billion. So maybe a rally is a really good opportunity to get some new sales on. But we'll keep an eye on this, right? And if we break above where we were 26 days ago and we trade back inside and above this cloud, then we're going to shift our bias to long, and we won't shift it back down until it comes back below it. So you can kind of see what's unfolding here. Right? Let me give you some different scenarios for December corn so you can think about how you want to manage this risk. We can just blow higher, of course. We can do that. I don't know what would cause us to do that, but anything's possible. We could, and I think the most likely count is that we just kind of chop around for a little while. We get a big volatile day on Friday, and then we chop around. And we make sure that the crop gets planted and that we don't take away anybody's reason to plant it. And then as we chop sideways, we'll come inside this cloud. And then at that point, we'll either be long as we come out the top of it, or we'll get short as we trade out the bottom of it. Really pretty simple. And this cloud's going to give us, I think, a really nice opportunity to have a solid hedge base. And so as far as a future stop goes, I think this 560 area right back into this congestion zone, you can put a stop in there and just say, if we do get a big bearish report on Friday and it trades back below that, I'll go ahead and put a short position on, make sure I'm hedged against a deeper correction or a deeper sell-off, and then we'll trade from there. But I think the most likely is we're going to chop sideways, get into this cloud, and then be able to trade long out of it or short below it. So hope that's fairly simple to think through. That's how we're looking at it today. We'll have to see how we view it in a few days. All right. Here are soybeans. May soybeans really got rocking and rolling today. I think at one point they were up 30. We've retraced. Let's put this fib target on here so you can see what we've retraced of the last move down. We have retraced just about 50% of the last move from March 6th. So we've retraced about half of that over the last 3 days. And if you think about this, we're trading back to where we opened last Wednesday. So a lot of movement here in beans over the last 6 trading sessions. 1, 2, 3, 4, 5 trading sessions, I guess. And we've traded right back to the midpoint. If we're able to trade back above 1470, 78 in that area, I think it's probably worth hitting the pause button. And again, like everything else, a reversion back to on top of our clouds is bullish. Otherwise, we're going to view it as bearish below those clouds and certainly below our hedge lines. Okay, let's look at new crop. New crop's not quite as bullish. Put the cloud on there so you can see it. Clearly not as bullish as old crop. We've only retraced 38.2% of the most recent move. No reason it can't move on a little bit higher. And I think, like corn, its most likely new direction is sideways, not straight up, not straight down. I think we're going to have a longer correction here, and we're probably about done moving higher, I think. So we're just going to sit and hold these for now and wait and see what the report says. And we're not going to make any new recommendations on there. You know, we've been short $15 calls and long 13.40 puts. And I still like that position. You know, if let's say we do rally and put $1 back on it and go all the way back to 14.20, okay, that's awesome, right? We lose our hedge gain, but we've captured it in the cash all the way up to 14.20. Yay us. No harm, no foul. If we trend sideways and we end up puking and needing to go lower, then we'll probably add to sales, and we'll be happy with the position that we have on. So I see no reason to make an adjustment in beans. See no reason at the moment to make an adjustment in wheat, even though it's stronger than we'd probably like it to be. And same with corn. I think we're going to bet that our next most probable direction is more sideways. And by sideways, I don't mean we're just going to go straight sideways. We're going to chop. We're going to chop and we're going to slop and we're going to be nasty here probably until we get through planting, and we may have a dollar range to play with here over the next 30 to 60 days while we plant. But you know, who knows? Who knows what we'll do? But for now, we're just going to sit tight with where we're at. All right, that is 12 minutes. We'll be in touch again this week. You know, at least on Friday, probably ahead of time, and we'll send out a balance sheet with some different acreage forecasts so you can see quickly what the carryouts are likely to do given different acreage numbers that the USDA might put out on Friday. So big week ahead, and the next 10 days are going to be really important for long-term directions, so stay tuned to us. We'll be here to help provide the leadership for you and keep you positioned correctly. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. I hope you guys have a great Tuesday night. We will talk to you later. See ya.